TraderInsight.com. I'm Adrian Manns. It's July 25th, 2022. Let's take a look at how to trade those volatility bands. Here you see the trading plan for Microsoft for today. This, of course, is the volatility band trading plan, and you can see here that we had a short side setup. That means we're only looking to go short this stock. No matter what else it does over the course of the day, my bias on this is based on going short. $260.83 would be the first threshold entry, and what I want to see is that it comes into this level from above. So it can start below, move higher, come back down through, but I want to see it come in from above, come down to 260.83. That'll trigger an entry. That entry is followed by an exit at 260.29, or if we see that the momentum is building and that we've got a very solid bar forming, we can go from 260.29 down to 259.81, down to 259.26, and that's where we've got our profit objective then set for this entire travel range, 260.83 down to 259.26. I had a very interesting conversation with one of our bootcamp alumni, and he was talking about teaching people how to speak different languages. And he was saying that when you teach people to speak other languages, the most important thing is to get them to focus first on the present tense. And I think that some of this stuff goes off the rails for people because they don't want to focus on the present tense. They want to focus on some aggressive trading activity. They want to get in front of momentum. They want to chase price. They want to get on board. They don't want to miss something, right? You can just go down the list and have a million reasons that people violate what they are supposed to be doing. But generally speaking, I think the biggest factor in keeping your eye on the ball with these trades is to bear in mind where the trade came from. So you should be putting these together for yourself anyways. Most of you have been to boot camp. Most of you have taken the volatility band course after boot camp. This really relies heavily on the basics that you learned in the Income Trading Academy and at boot camp. And what you're looking for are identifiable areas of support and resistance in today's trading that are going to predict where tomorrow's trading will go. And we want to find the most important things that happened. So you can see here that on Friday, Microsoft made this downtrending move into the close, and that these levels right here are the ones that constricted price movement. So these are the four bands that I drew as being the most significant for the session. You can see that they overlap very nicely with this volume by price data out here. These histograms of volume by price fall very much in line with where I drew these volatility bands. What that tells me is if price gets back into these ranges again, we're very likely going to have a repeat of what happened on Friday. As you can see here on Monday morning, that's exactly what happened. Microsoft opened, it punched down through 260.83, made it almost all the way to the profit objective, came back out. That time would have stopped you out flat. Your money management rules would probably say you're going to get out right above these highs right here. This represents the significant resistance. You might go up to here and say this is the level that you want to focus on. But one way or another, one of these two areas should be where you're pulling the plug if you're wrong on a trade. When the first bar closed and the second bar opened and made this move down through the volatility bands, there were a couple ways that it could have been set up. Now, as I've said many times in the past, there's a couple ways you can play this. A 260.83 entry with a 260.29 bracket is going to get you out right at that 29 profit target. So O spot 29 would take you out. Then the question is, does this bar ever move higher? Does it get back above 260.29 and come back down through? If it does, you should be short again at O spot 29 with a 9 spot 81 target. And then the same thing. Does it reverse, come back up, get you back in again, and then take you down to 259.26, the final target for this particular plan? If that's the way you play it, then you of course accept that you may not get in for these continuation moves. But this is a real good way to focus on that present tense. Again, you want to look back here when you're setting these up and say what happened on Friday that's going to affect how we trade today. Whether you forget the past or you live in it, the future's not going to make any sense. So you need to be able to go back and look at this data and say, how does this affect the present price activity? The second way you can handle this trade is an entry at 260.83 with a soft stop. So you can have your stop loss set up in this area, and when you get down through 260.29, your first profit objective, you pull that stop loss down to 260.29. When you get down to 259.81, you pull the stop in behind again, and now your stop is 259.81. And when you get down to 259.26, you do the same thing. You pull your stop in, 259.26. Would you capture the rest of this move to the downside if that's what you did? The answer is no, because the next bar opens, and before it gets down to the bottom of the range here, it goes and ticks back up to 259.26. What you accomplished is you captured all three of these bands. You need to crawl before you walk, you need to walk before you run, and going back and focusing on the basics, focusing on the methodology and the rules is the only way to become a master of the volatility bands. So there you have it. That's it for today. If you have any questions, shoot me an email, adrian@traderinsight.com. I hope you had a great trading day today and an even better one on deck for tomorrow. It's the best trader education anywhere, only from traderinsight.com.